Something unusual just happened in the silver market, and experienced traders are paying very close attention. Over the last 5 trading sessions, open interest in COMEX silver futures dropped by nearly 47,000 contracts. That represents roughly 235 million ounces of paper silver disappearing from the market in less than a week. Under normal conditions, a collapse of that size would send silver prices sharply lower. But that didn't happen. Silver barely moved. The metal was trading around $81.305 days ago. And even after the massive reduction in futures exposure, silver stayed near $80.97, a decline of less than 0.5%, while open interest plunged almost 30%. That kind of divergence is rare, and in commodity markets, it is often considered one of the strongest bullish signals possible. What open interest actually means: most retail investors focus only on price, but professional commodity traders watch open interest just as closely. Open interest measures the total number of active futures contracts that haven't been closed yet. When new buyers and sellers enter the market, open interest rises. When positions are closed, it falls. Normally, rising prices plus rising open interest equals strong bullish momentum. Falling prices plus falling open interest equals weakening market. Falling open interest while price stays stable equals something unusual is happening. That last scenario suggests leveraged traders are exiting the market, but strong buyers are quietly absorbing the selling pressure. In other words, weak hands are leaving while stronger buyers continue accumulating. Why this matters for silver? Silver is unique because there are really 2 markets operating at the same time. The paper futures market, the physical silver market futures market, is dominated by leverage and speculation. The physical market is driven by real-world demand from investors, industry, and institutions. When paper traders sell aggressively but the price refuses to collapse, it often means physical buyers are stepping in and absorbing supply. That is exactly what appears to be happening now. The historical pattern, the setup, has only appeared a few times in the last 15 years. The most famous example happened in September 2010. At that time, silver was trading near $19 to $20. Open interest suddenly dropped more than 25%, yet prices stayed relatively stable. Many analysts thought the rally was finished. Instead, silver exploded higher. Within months, it climbed to nearly $50 per ounce, one of the strongest rallies in modern silver history. A similar situation appeared again during the March 2020 pandemic panic. Silver crashed alongside global markets, and open interest collapsed as leveraged traders were forced out, but physical demand surged at the same time. Coin dealers sold out, premiums exploded, and physical silver became difficult to find. Silver bottomed near $12. 5 months later, it touched $30. What makes the current setup interesting to this market is showing several of the same characteristics. Open interest collapsing rapidly, prices holding firm near highs, physical demand remaining strong, commercial short positions declining, technical breakout levels approaching at the same time. COMEX silver inventories continue shrinking, especially registered silver available for delivery. Chinese buyers are reportedly paying premiums above global spot prices to secure physical silver, while retail investors in the US and Europe are still paying heavy premiums on coins and bars. That suggests physical demand remains extremely strong despite volatility in paper markets. The technical setup: silver is also approaching a major resistance zone near $84.85. Technically, the market appears to be forming an ascending triangle pattern, a structure traders often associate with bullish continuation moves. If silver breaks and holds above that resistance area, momentum traders and short covering could accelerate the move higher very quickly. Some analysts believe a confirmed breakout could open the path toward the mid-$90 range initially, with even higher targets possible if physical supply tightness continues. 5 signals traders are watching over the next several weeks. Traders will likely focus on 5 key indicators. COMEX silver inventories open interest staying low, a breakout above $85 commercial short positioning physical silver premiums worldwide. Those conditions continue strengthening together. Many silver bulls believe the market could be entering the early stage of another major rally. Final thoughts: the current silver setup is attracting attention because it combines strong technical patterns with unusual futures market behavior and signs of TIG. Stunning physical supply that doesn't guarantee an explosive rally tomorrow. Markets can remain volatile, and silver has a history of sharp pullbacks, but historically, when open interest collapses while prices remain stable, it has often signaled that stronger buyers are quietly taking control of the market, and that is why many silver investors believe this could be one of the most important signals the market has produced in years.